little bit of reversal from the past 2 days as yields are down and the dollar's down too. Phil Streible's back with us, joining us, the chief market strategist at Blue Line Futures. Phil, so we got a little bit of bond bulls and dollar bears coming back today. What do you make of it?
Well, I mean, we don't really have much. We had Cleveland Fed Master, FOMC voter. She's super hawkish. You know, she is also leaving her post here in June when their term ends. She said that March is probably too early. This is January 11th, and that they need more evidence. CPI shows that there's more work to do. Today, she said it would be a mistake to cut too soon, and it's going to happen later this year. You look at that core PCE, it's fallen to 2.6%. A year ago, it was at 5.4%. So inflation's moving in the right direction. Really, the Fed has two options: slower and sooner, or faster and later. So I think that's why we got a little bit of a pullback here. Dollar index, treasury yields, a little bit of a risk on appetite across the board in many of the commodities and stock indices.
That's the Phil Streible macro take, though, because there could be other outcomes. Maybe they go later, but it doesn't have to be fast. Maybe we don't hit a wall in the economy. Maybe it's, a pause like we did on the way up. Don't think so?
He'll end up disappointing. That's what'll happen. I think it'll come down to the election. I think he'll get some pressure. He'll get a call on the bat phone. They'll be like, "Look, Jerome, you got to cut 50, buddy. We got to release the dirt, the debt burden. We've got to fix this." We'll see what happens with, you're talking about key core bank and put options and this and that. Last time that a banking crisis happened, March 2023, gold went up $175 in 8 days. So. That's when the chatter was that the Fed's got to make cuts right away. So we'll see if that has any steam. That Bank Corp, that New York City Bank Corp's fallen like 60% like in a week. So, it's tough to see what happens here. The dollar index, that massive reversal of fortune we saw on Friday, the continuation of the upside, I think there was a lot of stops getting hit here today. I think today's weakness in the dollar just is a little bit of overbought action. Really, somebody should be long technically from January 18th. The breakout on the dollar index should be trailing a stop. I suggest 50-day moving average 102.60, but you're wrong if we close below 102.75.
Okay, so you think dollars, basically that's it. We saw a little reversion of the trade. If you think Fed's going to eventually have to cut, if your outcomes are either soon and slow or later and fast, that means the dollar probably doesn't get very high from here.
I don't think so. I don't think the dollar is going to go very high. And I mean, the tail wags the dog. You look at gold, it's always the timing, the pace, the depth of the interest rate cuts. Economic data that comes out impacts yields. Yields impact the dollar. Stronger dollar hurts gold. Weaker dollar helps gold. Since 1990, you look at gold historically has risen 6% within 30 days of the first interest rate cut. So short term, if you're trading gold, it's the Fed's forward rate path. It's going to drive short-term price action. So if you're over leveraged and you're micromanaging your position, things like reports that come out on Thursday, like initial claims and continuous claims, they're going to drive you nuts because they're like a little yo-yo bouncing back and forth. You got to take a step back, look at the big picture. The Fed will eventually cut rates regardless of what happens. They're too high right now. It's a very restrictive policy stance that we have at the moment.
Hey, well, when even Mester, who has been a little bit more hawkish, like you mentioned, says eventually this year, I do feel like that's a point for the doves that she's saying, talking about it like it's almost a defined outcome.
It's like talking about 2 years out in baseball. What happens? Look, Mester's done in June, so she's saying that at the later end of the year they're going to cut rates. She's not even going to be there. She's already been traded. She's off the team. So
yeah,
that's the reality. So you gotta, if you're gonna trade this thing, like your audience should have a scorecard. Who are the voting members? Are they hawkish? Are they dovish? Which way do they lean? And then they should have little notes. What did she say at the last time she talked? Major press conference, January 11th. March is too early. They need to see more evidence. She mentioned CPI. So you're going to know if CPI is what she mentions in there. She's watching it. Now you get a bunch of Fed officials out there all watching the same report. That's the report you want to look at. You want to look at the rate of change. Is it going up or down? Things like that. That's a simple playbook for your audience to follow. And then I think it alleviates some of the stress. They're able to trade a little bit better. Your best trading is when you're relaxed.
Agreed, for sure. Should the numbers from yesterday's services, prices paid popping, same story on the last ice in manufacturing. Then, of course, we got the nice wages component too that was a little bit warm, maybe seasonal, but a little bit warm. Does any of that make you unrelaxed about the Dove case?
No, not at all. I like to see the economy hub. I'm not a guy who wants to see the economy crash and burn so I could get lower interest rates.
Yeah,
I want to see them just.
I hate that narrative.
Just like, can't we all just have a great time here? You know, people should have jobs. People should have great jobs. I think wages, they don't need to be like, you don't need to be negotiating for massive pay raises without, qualification and things like that. So wage growth was way too high. It's come back to normalization. Starting to see happy hour pop up again here and there. So prices are coming back down to a couple bucks a beer. So that inflation's going away. So I think that things are fading out. The economy's going to be great. It's not even going to be a soft landing. These tires are not going to even touch the runway. I think we're gonna buzz the watchtower.
Yeah, that's it. I feel like there's a Top Gun reference here coming. All right, thanks, Phil. Good chat.
Take care, bud.
All right, like the macro framework, Phil Streible, Chief Market Strategist, Blue Line Futures, are developing.